On a spot, the exact moment a stock or crypto is about to reverse or making you serious profits. In this video, I'm breaking down the RSI indicator, your secret weapon for nailing trades like a pro. So mastering the RSI, your guide to the relative strength index. What is good? Welcome to your ultimate guide to mastering the RSI, the relative strength index. This powerful tool can help you spot killer trades in stocks, crypto, and more. Let's dive in and learn what the RSI is, how it works, and how you can use it to level up your trading game. So first off, let's start off with saying what is RSI? All right, let's break it down. RSI, a relative strength index, is a momentum oscillator that measures how fast and strong a price is moving. It's a scale from 0 to 100, where above 70 means overbought, think pricey, and below 30 means oversold, like a bargain. Big tech firms use this to know if a stock is overvalued or undervalued. And a lot of retailers and a lot of everyday traders use this one as well. They use it for day trading, swing trading, and even for their long terms. But it is created by Jay Wellies Wilder. It's a go to for traders in stocks, forex, even crypto. So check out the scale. 30 and 70 are your key levels to watch. If it falls above that 70, overbought. If it falls below it, is oversold. So kind of get a little understanding on that because that's kind of the broader sense of how to use this. Later on in the video, towards the end, I'm going to be showing you guys how to put it in your trading and use it for everyday trades. So stay tuned for that as well. But how does it work? So here's the deal with RSI. It's calculated using average gains versus average losses over a period, usually 14 days or candles. What is the formula? Don't sweat it. It's just math that spits out a number between 0 and 100. If RSI rises above 70, the asset might be overbought and ready to drop. Below 30, it is oversold, possibly ready for a bounce. Around 50, that's neutral, just chilling. So if we kind of use this chart as a little example, it shows once it fell above that line, we seen a big spike and a big sell off right after that. Because it was signaled as an overbought, and then once it fell below that level, we seen a little bit of a spike up later on, and then you seen it kind of come back, and then kind of just like following the chart overall. But I mean, it's obviously going to follow the chart, but it shows you where the stock can significantly fall, especially if you look at the key levels. Like, look at when it does go up to that 70, it shortly sells off right after that, and then it gets lower, and then it buys back, gets higher, sells off. So just keep that in mind and overall, because it's not really going to tell you, like, let's say if you do see it up here, it is going to sell off shortly after that. Maybe not, potentially, but probably not. But with that being said, this can tell you potentially where the next move is going to go. I'm not saying do your next trade based on this, but have this as one of your indicators. I have other videos like the MACD is a great indicator as well to have beside the RSI, and VWAP and stuff like that is great to use overall. It's all about using multiple indicators. Don't just use one and then just buy and sell based on that. For anyone that's trying to take their trading to the next level, made a website with a bunch of courses that you guys can check out. First link in the description below. Check it out if you guys want to up your knowledge on the stock market. Relatively cheap courses, and we have sales going on. So check them out while the sales is still happening. I'm also coming out with daily blogs to update you guys with the stock market before I even make these videos. So if you guys want early news, early stock plays, and things to watch, check out the site as well. This is completely free. Just go into the website, go into Creator's blog. You guys can check it out if you guys want. So why should you care about RSI? It's awesome for spotting potential price reversals and checking trend strength. Works on any time frame, day trading, swing trading, you name it. But heads up, it's not perfect. RSI can give false signals and strong trends. So pair it with stuff like moving averages or supports and resistance, or like I said, the MACD. If you look at this chart right here, it basically showed that Apple was overbought. But if we can see the chart, it didn't really drop too much. It did still drop a tiny amount. You can still make a decent amount of money. But with that being said, you didn't really get a big price downwards like we've seen in this chart right here, where when it was marked as overbought, it like fell down a significant amount. So keep that in mind. It can always show false indicators. Also, pair this with news, especially right now we're in a news-driven market. So news can really move things as well. But if we have no news and you see it overbought, maybe it might potentially sell off a little bit faster. So step-to-step guide on how to use the RSI. So ready to use the RSI like a pro? Here's how. Step 1, pick your time frame, hourly, daily, whatever you use personally trading, whatever fits you basically. Step 2, add RSI to your chart. TradingView, MetaTrader, it's built in already. Just search it up. I'm going to be showing you guys in a couple of minutes how to set this up on TradingView. Step 3, set the period. So 14 is standard, but tweak it for more or less sensitivity. Step 4, watch for overbought above 70 or oversold is below 30. Step 5, confirm your price action or other indicators. Step 6, plan your trade, entry, stop loss, take profit. Look at this setup. It's a pretty easy setup, especially if you use it with other indicators. So some trading strategies for RSI. So let's talk strategies. First, overbought, oversold, buy when RSI dips below that 30 and crosses back up. Sell when it hits 70 and drops back. Second, RSI divergence, super powerful. Bullish divergence is when the price makes lower lows, but RSI makes higher lows, hinting at a buy. Bearish divergence, higher price highs, but lower RSI highs. Sell signal, third, trend confirmed. RSI above 50 for uptrends, below 50 for downtrends. Kind of confusing, I understand. So more of an example. First, Apple on a daily chart, RSI dropped to 25, oversold territory. They crossed back above 30 with a bullish hammer looking candle. Result, price jumped 10% in a week. Next, Bitcoin on a 4-hour chart, price made higher highs, but RSI showed lower highs. Bearish divergence. Sure enough, price corrected 5%. So that's kind of an example on how some of these strategies can work for you. You guys can screenshot this and kind of follow along. Not really like follow along for your next trade, but kind of just learn and kind of understand it a little bit more so you guys can understand RSI overall. But tips for using the RSI effectively. Want to crush it with RSI? Combine it with other tools like supports and resistance or moving averages for better accuracy. Don't rely on it alone. Confirm those signals. Try tweaking the period 9 for short term, 21 for long term, and always, please use stop losses and smart positioning sizing. This checklist has you covered. And if you have any questions, comment down below or join the website. So common mistakes to avoid: don't trip up. First mistake, trading RSI signals without confirmation. Price action or other indicators are key. Second, ignoring the trend. RSI can stay overbought or oversold in strong markets. So check the bigger picture, like news and stuff like that, like I said before. Third, using RSI in choppy sideways markets. It's best for trending or raging setups. I mean, honestly, I think any indicator is pretty bad for choppier markets. So keep that in mind, because honestly, it's going to show you guys false signals back and forth. So before we get to how to really set it up, let's get to a little conclusion. So let's wrap it up. RSI is your go-to for spotting overbought, oversold, and divergence signals. Pair it with other tools and solid risk management to trade like a boss. Try it out on a demo account first, of course. Get your trading setup set up, and you'll be ready to go. Drop whatever RSI trades you have in the comments and smash that subscribe button. Now let's get to how to set it up. I feel like a lot of people love the SPY, so we're going to be setting it up on the overall SPY. And right now we're looking pretty bearish. This is before the market opens, so keep that in mind overall. But with that being said, man, all you have to do is go over to the indicators window, and this can be on any platform, and just literally search up RSI. You're going to have multiple, so you have multiple options here, but I do recommend clicking the actual name, relative strength index. There are multiple. You guys can look up whichever ones maybe work out for you better, but I'm personally just going to be using the basic one. After you click it, it's going to be enabled. This one is my MACD, so don't mind that one for now. Just look at the RSI. Okay, so basically, man, it's going to show you guys the ranges, like I said before, 70 to that 30 level, and honestly, anything above or below. I don't recommend editing that, but if we go up over to this little window, it's like two pages on top of each other or whatever, and then you want to just go over to your RSI, and then you can right click on it, and then you can say settings. So this is where you can edit your settings, colors, anything that you really want to do. The inputs is going to be basically the basic, which is going to be 14. But like I said before, you could change it based on your trades. So let's say if you're a long-term trader, it is going to be set to 21, and then short-term set to 9, and then you can kind of still edit it on how you really want it to like look basically. So you might be able to use 10 if you don't want to be too short-term, or maybe 12. Pick a number that works better for you, but we're just going to keep it to basic, the 14 for now. And honestly, man, it's basically set up. So honestly, we seen it a little bit. So when S&P or the SPY spiked up, we seen it almost hit that 70 and almost break past that 70. So with that being said, we did have a big sell-off, but honestly, we can all agree that this was kind of news as well, but it did kind of work out a little bit as well, because I mean, it's been working out a decent amount for the SPY. You know, we've been breaking above, like right here, it kind of worked, but kind of didn't. And you're also going to have like spikes, like kind of when it opens up for pre-market area. you're gonna see a fast spike just because it went up today. But let's say for market open right here, we opened up and we were overbought, and guess what? We sold shortly after that. You made, let's say, 604 all the way down to that 601. So you could have been $2 to $3 in the money on a put option for this one right here. But honestly, just have your patience with this indicator and comment down below if you guys have any questions overall. But with that being said, man, thanks for watching the video. Smash the like button, subscribe if you guys are new. I make videos like this all the time, and I also give you guys daily videos on news and what to expect for the stock market, and even give you guys stock market picks. So make sure those post notifications are on so you guys never miss out. Let us get to 500 subs, and I'll see you guys in the next one. Peace out.